news. Well, with that, let's introduce our first guest on the show. We have Taimur Baig, Managing Director and Chief Economist at DBS Group, joining in. Taimur, thank you so much. Season's greetings.
Season's
I am
greetings,
so glad.
Ravi.
I'm sorry we're making you work and you're here with us in the studio, but thank you so much for doing that. Because, you know, we're coming to the end of a very interesting year here in India. Yesterday, Finance Ministry officials released, some macro stats on India. What caught my eye was the title. They said it's a Goldilocks phase for the Indian economy. And then they, of course, gave a lot of the reasons why they think so. Markets here have not quite felt like Goldilocks in India. Do you think that's going to change in 26 for the better?
Sometimes taking a longer view is useful. When I talk to VCs in India or PE managers in India, they tell me that the boom of 22, 23, 24 have spilled over into healthy capital market dynamics in 25. So even if the headline numbers that we talk about on the media suggest that the stock market had a listless 2025, when we talk about the providers of capital and the borrowers of capital, it's been actually a stronger year in terms of per deal revenue. So that tells me that instead of just looking at the fact that this was not a great year for Nifty, we should think about the fact that the 22 to 24 boom paved the way for a very strong capital market dynamic in 2025, which might even provide foundation for strong earnings growth in 2026, when even if that Goldilocks sort of is behind us, the extremely low inflation, we should look at the half full part of the story, which is in 2026, we'll probably see a pickup in nominal GDP growth. As inflation normalizes, we're looking at a 10% nominal growth year in 2026 calendar year, as opposed to 2025, where we think about 9.2% nominal GDP growth.
Usually, people equate corporate earnings to nominal GDP growth because that's where, the profits come, which include inflation. In your analysis, what is the correlation out there? And do you believe that corporate earnings will be double-digit in FY27?
It varies by sector in a very big way. If we have a situation where nominal GDP growth rate picks up, along with that, there's some upshift in nominal interest rates, market-driven interest rate, not RBI-driven interest rates, then of course that has a sort of a complicated picture as far as non-financials are concerned. But banks, for example, see an improvement in NIMs, and they then make more money. At the same time, we can reverse the causality and say the higher nominal growth is actually a function of stronger demand as opposed to a policy-driven outcome. And therefore, even if rates are higher, borrowing takes place. I normally think of a situation where sentiment is strong. It doesn't really matter what the interest rates are. Borrowing takes place. If the sentiments are poor, no matter how low the rates are, people don't borrow. We're looking at 26 as a year where sentiment picks up on the borrowing side of the spectrum. Good for financials, good for lenders, but also underpinned by strong borrower confidence.
Taimur, I don't know if you agree with this. I'm just throwing this idea out. Globally, just look at what's happening, right? I mean, this is in terms of just radical innovation, this is perhaps right up there as one of the phases over the last couple of years. You look at all what is happening in AI, but forget just AI, but using AI, so much happening in drug discovery. I mean, we're talking about data centers in space now, right? I mean, unimaginable, right, over the last couple of years. And it's not as if 2025 has been a bad year. I mean, Korea has done extremely well. I mean, so many other markets have done phenomenally well. And here there seems to be a lack of enthusiasm. What will drive things from here? Will it just be waiting for that slight earnings recovery or what? What's your sense?
Well, Prashant, the obvious gorilla in the room is the uncertainty vis-a-vis the U.S. And if we start 2026 with some positive development in that area, that certainly helps. When you talk to sort of gems and jewelry exporters, it has not been a good year at all. It's been very, very challenging with the tariff backdrop. Similarly, with other exporters that have found U.S. to be a critical market, it's been a tough year. I think the big lesson for 2025 for me, again, trying to take the half-full view, is the criticality of non-U.S. markets. We cannot put all our eggs in the U.S. basket, which I think was probably the safe thing to do in the past because U.S. was a very reliable counterpart. I think we can safely say that is not going to be the case, regardless of whether there's a deal or not. And hence, Middle East, Europe, East Asia, in my view, very, very critical for Indian industrialists to look around, not just for exports, but also for deals. Again, going back to my earlier point that the boom of 23, 24 have now allowed Indian capitalists to go shopping around the world. Despite the fact that the market has been lackluster, they traded strong multiples relative to the multiples in that part of the world. So therefore, you see when you go to Seoul, you go to Tokyo, a lot of Indian VCs, a lot of Indian industrialists showing up, looking for technology, looking for interesting buying opportunities. So it's a question of recognizing the non-criticality of the criticality of the non-US markets.
The happiest creatures in the capital market ecosystem clearly have been the investment bankers. I'm sure they're getting set for a really big New Year party. But on that point of deals, I mean, not that it's directly related to your area of study, Taimur, but since you talk to so many people in the financial universe, we've seen deals and we've seen deals and we've seen M&A. I mean, the latest was Coforge going ahead and picking up a large, a global entity, a US-based company. So there's that. But then the big talking point has also been a lot of the exits. Foreign private equity exiting, foreign promoters exiting, foreign parent companies exiting, Castrol being the latest one now, selling a part of their business here. Does that tell us that, this is money that doesn't see that level of India growth ahead? The kind of India growth for which foreign capital would always pay top dollar. Is that a cause of concern?
Not at all.
Okay.
I think the exits are a very good sign because that tells you that if you do put patient capital in India, that patience is rewarded and you get decent returns. I know lots of people in the private equity industry. 5-6 years ago, their life was very challenging because rolling over funds was difficult because people were saying, where are the successful exits? Give me some examples.
Yeah.
Tomorrow, if you go out to raise fund, you can provide dozens and dozens of examples of successful exit. It's telling you that the capital market is deepening. There is sufficient local demand and there is sufficient new investors to take on the exits of the previous players. So I would see this as actually a positive sign. Now, we can argue that, well, it has come at a difficult time for India because that has actually made the rupee a little weak.
Yeah.
It's caused some complications in the capital flow environment. But to me, that is a very short-term temporary blip around an overall constructive picture. But I go back to Prashant's question about, what will drive the markets in 2026 for India? Is there an AI-type catalyst there? To me, that would have to be A, normalization with the US, but B, as I'm seeing when I travel in East Asia, that the Indian corporates are becoming more and more constructive vis-a-vis East Asia. You remember, there was a time when India was not really looking east anymore. Everything was to the west. The alignment was with Europe and the US, and India's growth leverage was going to come from there. I think that recognition is the other key driver. Look at the performance of East Asian markets this year.
That's what I said. I mean, actually,
Exactly.
Korea is the tiger this year, right?
Let's not forget China either. Yes.
China as well. This is the time for forecasts, Taimur. One non-consensus forecast from you.
I think it's not necessarily an economic growth or market turnaround forecast. I think the increasing recognition of new tech coming from China.
But that happened in 25, right? I mean, I think...
So, on drug discovery, you had mentioned very briefly that issue. That to me, when I talk to Western drug CEOs, whether in Europe or the US, they are busy setting up joint venture with Chinese drug companies because on aging, on protein folding related matters.
Cancer.
Cancer. Gene therapy, the key breakthroughs are coming from Chinese labs. So the greater recognition that key breakthroughs in tech, not just in life science, but from a wide range of sectors, would come from China, sort of changes the game. In the past, the narrative has been the Chinese copy technology, they steal IP.
But I think that
the workshop of the
got
world.
debunked in 2025.
You would be surprised to see the number of people I meet in the West who still believe in that stereotype. The question is, how much are they willing to pay for new tech coming out of China?
My only hope is that, I mean, it almost feels like US and China are racing ahead and everybody else is
No one's looking at us.
Everybody else is falling into the gulf. I just hope we really kind of recognize some of this.
When you speak about innovation, when you speak about what's coming out of China, what's coming out of the US, the question that we're still asking is when will capex pick up? When will consumption
That's what I was.
pick up?
That's what I meant. I said some of the all important, Mangalam. But
they're all important, but
is,
different points.
So, Mangalam, the issue is, if the Chinese find it difficult increasingly to deal with the US, my view is that they will be better players in dealing with the likes of India. I think the EV space is a very good example of that. They're okay with tech transfer. They're okay with 50-50 joint ownership. Increasingly around a wider range of tech stack, the size of Indian market will bring them to play with better terms.
Well,
that's a prediction to remember. Better India-China sort of alliance and maybe just a win-win for both.
On equal terms.
Well, fantastic having you with us here. Wishing
Take
you
care.
all the best. Happy New Year.
Happy New Year.
Team.
Take care.
And fantastic shirt, by the way.
Yeah, I thought that would come much earlier in the conversation. I'm glad that it's not a jacket and a tie.
I was not going to wear a jacket on the 30th of December, yes.